Welcome to this edition of Ethical Sustainable Investment News and Analysis to Profit By. I'm Ron Robbins, an ethical investing pioneer for over 40 years, quoted in the Wall Street Journal, MarketWatch, the Globe and Mail, and numerous other media, and founder of the highly respected global ethical sustainable investing information website, Investing for the Soul. And please listen to my disclaimer statement at the end of this podcast. Now enjoy this podcast. Hello, Ron Robbins here. I do hope that you are okay and managing to stay calm, healthy, and focused on what positive contribution you can make to help alleviate the terrible distress in these deeply troublesome times. Investing in ethical and sustainable companies has never been more important than it is now. Anyhow, welcome to podcast episode 78, published on March 11th, 2022, titled Top Water Energy Stocks and Funds, and presented by Investing for the Soul. Investingforthesoul.com is your site for vital global, ethical, and sustainable investing news, commentary, information, and resources. Remember that you can find a full transcript, links to content, including stock symbols, quotes, and bonus material at this episode's podcast page located at investingforthesoul.com/podcasts. Now, just a reminder, I do not evaluate any of the stocks or funds mentioned in this podcast. Furthermore, if you're concerned about the ESG and sustainability ratings of any stock or fund included in this podcast, check your broker's online site for such information. If your broker doesn't have this information, sign up for free with Morningstar, and you can gain access to company and fund ESG sustainability ratings. Please note, I receive no compensation from Morningstar or anyone else covered in these podcasts. Also, if any terms are unfamiliar to you, simply Google them. Now, the first article I want to review concerns the water industry, an industry receiving great attention from ethical and sustainable investors. The article's title is 5 Blue Economy Stocks and Funds. It's written by Nellie S. Huang and published by Kiplinger. Ms. Huang writes, quote, "The blue economy represents all of the dollars spent to improve the economic growth, health, and livelihood of ocean and coastal zone ecosystems." You can't have a healthy planet without a healthy ocean, says Louise Heaps, the head of Sustainable Blue Economy at the global non-profit WWF in London. The article continues, "We recommend 2 funds that focus on water sustainability. We also found the stocks of 3 companies doing interesting things that will help us use water more efficiently or that go some way towards stemming water pollution. The funds and stocks are 1. Fidelity Water Sustainability Fund is a new, actively managed fund, focuses on firms working on solving the world's water crisis. Industrial machinery is the fund's top industry weighting at 1/4 of assets. It's followed by water utilities at 17% and electronic equipment and instruments 15%, as well as 11% of assets each in building products and industrial conglomerates. Roper Technologies and American Water Works are top holdings. The fund has returned 7.9% over the past 12 months. 2. Invesco Water Resources ETF. Invesco has 3 water-focused exchange-traded funds, but we favor Invesco Water Resources ETF because it tracks a NASDAQ index that includes companies creating products designed to conserve and purify water. Invesco Water Resources ETF is similar to Fidelity Water Sustainability Fund in that its largest asset concentrations are in machinery, 27%, and water utilities, 20%. However, it also has a substantial 16% invested in life sciences, tools, and services. Waters Corp and American Water Works top the portfolio. The fund has gained 9.4% over the past 12 months. Now the 3 stocks. One is Tetra Tech, is an engineering and consulting firm, has big roles in many sustainable areas, including water management. For instance, the company helped the Kentucky Sewer System Authority save $200 million from 2006 to date by building a high-tech, real-time system to monitor and manage sewer system overflow during periods of heavy rain. Stifel analyst Noel Diltz recommends the Blue Economy stock. She says, "We believe the company is well positioned to benefit from strong secular drivers in water and environmental services, with 85% or more of revenues tied to these markets," she says. Analysts expect the company to deliver annual earnings growth of 9% in 2022 and 8% in 2023. The second company is Dynamo Scientific. The ocean is home to 5 plastic islands of floating trash. One is roughly twice the size of Texas. Dynamo Scientific could help reduce that. It is developing a kind of plastic that is 100% biodegradable and compostable. Dynamo Scientific had its initial public offering in December 2020. The company has a $409 million market value, no profits, and just $53 million in revenue over the past 12 months. Jefferies analyst Lawrence Alexander rates the stock a buy, saying that 2022 should be a validation year when leading brands adopt its plastic. It already has a number of well-known customers, including PepsiCo and Walmart. The third company is Deere. Excessive use of fertilizer can run off into waterways, harming plants, animals, and habitats, not to mention water quality. If we could just reduce the use of fertilizer, that would have the biggest positive impact on water, says Putnam's Collins. Deere's See and Spray Select technology, installed on a fertilizer sprayer, uses camera technology to identify color differentiation in the field so that only weeds get sprayed with herbicides. The system reduces herbicide use by 77% on average. Deere has its share of eco-bugaboos, but it's a leader in precision agriculture, technology that helps increase crop yields and minimize the use of fertilizers, 2 key environmental pluses. Credit Suisse Jamie Cook rates the stock outperform. End quotes. Now back to familiar territory with this article titled, "These 2 renewable energy stocks are too cheap to ignore," by Naha Shamaria and Rekha Kandawal on Fool.com. Here are some quotes from the authors on their picks. One, Neha Shamaria, recommends Brookfield Renewable Partners. The stock is finally showing some signs of life after languishing in 2021. But there's tremendous upside potential left in the stock at current prices. Brookfield Renewable generated record funds from operations in its third quarter, but the market paid no heed. I strongly believed it deserved better and even picked Brookfield Renewable as the only stock I'd buy in 2022 if I had to pick one. Brookfield Renewable's total pipeline is almost 3 times the size of its existing operational capacity, and it is this pipeline that should set Brookfield Renewable on the next growth path. For now, the company expects to grow funds from operations per unit by 10% or more through 2026. That should translate into regular annual dividend increases, which could be as high as 9% each year. Now combine that with Brookfield Renewable's dividend yield of 3.4% and the potential gains from reinvesting those dividends, and you could well be on your way to making a fortune if you add this renewable dividend growth stock to your portfolio. 2. Rekha Khandawal likes Next Era Energy Partners. The recent correction in renewable energy stocks due to concerns relating to overvaluation and rising interest rates has contributed to the fall in Next Era Energy Partners stock. However, the company's fundamentals remain rock solid. Next Era Energy Partners has certain key advantages over its competitors. To begin with, it is backed by a top utility, Next Era Energy. Next Era Energy has a huge and diversified portfolio of renewable energy assets, and it's been in the renewables business for more than 30 years. Next Era Energy's investment-grade balance sheet helps it raise funds at comparatively lower costs than its smaller peers. Next Era Energy Partners announced a distribution of 71 cents for the fourth quarter, which represents a sequential increase of 3.3%. On an annualized basis, the Q4 distribution grew 15% year over year. Next Era Energy Partners expects a 12 to 15% per year growth in its distributions through 2024. All in all, this is one renewable energy stock that you would surely want to buy right away. End quotes. Continuing on the theme of renewable energy is this article titled, Technical Analyst sees lots of upside potential in this alternative energy stock. Found on investorideas.com, and the source is Clive Mond. Here are some quotes. Things are going well for solar stock UGE International Limited, which looks like a buy here after what is believed to be prolonged base building since it hit bottom last June after a reactive phase. There is plenty of upside potential from here, as made clear by the position of the MACD indicator. End quotes. Now to one of the favorite companies by analysts featured in these podcasts. It's covered in this article titled, Why Enphase Energy Stock Soared in February. It's by Howard Smith and again found on Fool.com. Here are some quotes from Mr. Smith. The stock of solar system technology company Enphase Energy had a strong month in February. 2 separate catalysts were really responsible for the gains, resulting in an overall jump of 18.7% for the month, according to data from S&P Global Market Intelligence. First, the company reported its fourth quarter and full year 2021 results on February 8th, prompting a big single-day pop in the stock. The second catalyst wasn't company-specific. Many solar and other alternative energy stocks have soared in the final days of February as oil prices jumped on the backdrop of war in Ukraine and geopolitical uncertainty. After having given up some gains made after its strong earnings report, shares of Enphase soared almost 32% in the last 5 days of the month. Enphase reported record revenue of $412.7 million for its fourth quarter, bringing full year 2021 revenue to $1.38 billion, jumping nearly 80% over the 2020 total of $774.4 million. After generating $92.7 million in cash flow from operations and spending $300 million in share repurchases in December, Enphase also ended up the year with $1 billion in cash on its balance sheet. For investors, the main concern with Enphase should be its valuation. At its recent market cap of $21.2 billion, shares are trading at a price-to-earnings ratio of almost 150. While continued strong growth should bring that down over the next several years, it's an investment that comes with plenty of risk should there be any stumbles in the company's growth rate. End quotes. Looking for dividends? Then see this article titled, Why Digital Realty Trust is a Leading Socially Responsible Dividend Stock. It's authored by Elian on goodwordnews.com. Now some quotes from the author. Digital Realty Trust, Inc. has been named one of the best socially responsible stocks by Dividend Channel, meaning a stock with above-average results. Dividend ranks statistics, including a high yield of 3.5%, as well as being recognized by leading asset managers as being a socially responsible investment. According to ETF Channel's ETF Finder, Digital Realty Trust, Inc. is a member of the iShares USA ESG Select ETF, representing 0.19% of the fund's underlying holdings, which holds $7,077,077 in DLR shares. The annualized dividend paid by Digital Realty Trust is $4.64 a share, currently paid in quarterly installments. Digital Realty Trust operates in the REIT sector. End quotes. And now some recommendations related to Australian stocks. First one is titled 2 Exciting ASX Growth Shares for March 2022. And that's on Fool.com, Australia, by Tristan Harrison. Quote, Australian Ethical is investing significantly for growth and is benefiting from rapidly growing FUM. That's funds under management. And Airtasker's, the second company, platform gives it a high gross profit margin and it is growing quickly, particularly in the US and UK. End quote. 2. Title, 2 Popular ETFs You Need to Know, also from Fool.com, Australia. The ETFs are BetaShares Asia Technology Tigers ETF and BetaShares Global Sustainability Leaders ETF. Well, these are my top news stories with their stock and fund tips for this podcast. Top water energy stocks and funds. To get all the links, stock symbols, or to read the transcript of this podcast and more, go to investingforthesoul.com/podcast and scroll down to this episode. Also, be sure to click the like and subscribe buttons in Apple Podcasts, Google Podcasts, or wherever you download or listen to this podcast. And please click the share buttons to share this podcast with your friends and family. Let's promote ethical and sustainable investing as a powerful hope in these troubled times. Contact me if you have any questions. Thank you for listening. Talk to you next on March 25th. Bye for now. Learn how to create a simple portfolio reflecting your personal values by taking my 1-hour tutorial. Go to investingforthesoul.com/podcasts and click the link in the right-hand column for my DIY Ethical Sustainable Investing Pays tutorial. Now, I'll mention in the podcast if I have any direct interest or holdings in companies or securities I'm talking about. Furthermore, any news, opinions, analysis, or other information offered by myself, as well as references and information to or from other external sources in this podcast, is provided as general market information and should not be relied upon and thus does not constitute investment advice. Investors should consult their own licensed investment professional before making investments. Also, I will not accept liability for any loss or damage, including without limitation any loss of profit, which may arise directly or indirectly from use of or reliance on information in this podcast. Do contact me at ronr@investingforthesoul.com. Signing off, this is Ron Robbins.